Hey guys, it's Ron the Credit Don, and we're back with another 3-minute video tip. All right, I want you to get your notepads out for this one. I went ahead and pre-wrote these terms on the board that we're going to be discussing today because I wanted to make sure that you guys had an opportunity to write these terms down. All right, so today we're going to be talking about the 5 credit terms that everyone needs to know. All right, let's get into it. The first term is credit utilization ratio. All right, credit utilization ratio. This is simply the amount of credit that you're actually using. All right, if you guys have a $300 credit card and you have a $100 balance, you have a 33% credit utilization ratio on that card. All right, that's important because credit bureaus take that into consideration when determining your credit score. All right, the second term is debt to income ratio. All right, debt to income ratio. This is the ratio that mortgage lenders use whenever they're looking to see if you as a applicant are actually able to afford to pay what you're actually applying for. All right, so if you're applying for a mortgage loan, they're going to look at your debt versus your income. That's going to present a percentage, and you are going to be based, your approval is going to be based on that percentage. All right, so that's an important term to know. All right, the third term is billing cycle. All right, the billing cycle. Most of you guys that have credit cards, you may say, okay, my payment is due on this day, and so I must just have a 30-day billing cycle. But a lot of times it can be different. Sometimes you can have a 31-day billing cycle. Sometimes you can have a 28-day billing cycle. And that's important when you're looking at managing your credit cards and your payments and how much you're using within that billing cycle. So you want to be able to make sure you kind of call your companies or your credit card companies and see exactly what's the billing cycle for that account. This one, the fourth one, ties into the third one. So the fourth term is your closing date. All right, your closing date. This is the date that the credit card companies or the account holders report to the credit bureaus, all right, about your account. All right, so this is an important date to know because this is the date that any of the card companies that you have, any of the account that you have open, this is the date that they're going to report your activity for the billing cycle to the credit bureaus. All right, so you definitely want to know your closing date. And the fifth term is an inquiry or an inquiry. All right, this is anytime a company, whether it's a car company, a credit card company, a mortgage lender, any company that pulls your credit reports and retrieves them from the credit bureaus. All right, these do count against your scores. So if you accumulate a large amount of inquiries, chances are you're going to be hurting your scores as well. So guys, write these terms down. You want to know these terms moving forward in your financial life, to being able to be a person that is financially literate. You want to be able to make sure you know these terms and just moving around in your everyday life, guys. So hopefully this is helpful. Again, follow us on Instagram at Complete and Total Care. We're always responsive in the inbox and in the comment section as well. Again, this is Ron the Credit Don. Peace.